Goods and service tax. This is a presentation only meant for custom brokers to understand goods and service tax and how the same operates so that they could assist the exporters and the importers with a proper working so that there is no problem for them to take their tax credits. It is a legal enactment made applicable from the 1st of July 2017. But what we need to recognize is it is technology based. So all those concepts of taking papers, taking NOCs, going from pillar to post will not help you in GST. So an officer of the department telling you I'm giving you an NOC but I'm not filling it into the system will not help you. It is technology based. It is a transaction based tax. And it believes in the principle that the ultimate user will pay the tax. Yes, in the interim, every person who deals with the cargo will pay tax on the value addition that he is doing, but on whatever was his purchases, he will get a tax credit. So it is ultimately the final consumer who is going to pay for the tax. In India, the GST has been broken into 4 different types of GSTs. One is the IGST, the other is the CGST, the SGST and the UTGST. The IGST is integrated, CGST is central, SGST is state and UTGST is union territory. What does it say? When the central GST was enacted, it subsumed all the central taxes which were there. Things like central excise, sales tax, they all got subsumed into the CGST. The SGST took over all the state level taxes that were happening. So both of them together did away with a whole plethora of taxes that were being charged, and that is why we keep saying that GST is a single tax, single nation, single tax. What is the applicability of the different GSTs? The IGST applies for interstate transactions. Export and import is also interstate, so IGST is for interstate. CGST and SGST are for intrastate, that is within the state, and UTGST is within a union territory. Who is the charging authority? For the IGST, the charging authority is the central government. For the CGST, again it is the central government. For the SGST, it is the state government. And for the UTGST, it is the union territory. Who is the benefiting authority? IGST benefit is taken by both center and state. CGST benefit is taken by the center. SGST benefit is taken by the state. And the UTGST benefit is taken by the union territory. Tax credit. IGST tax credit can be taken against IGST, CGST and SGST. CGST tax credit can be taken against IGST and CGST. SGST tax credit can be taken against IGST and SGST, and UTGST tax credit can be taken against IGST as well as the UTGST. So just to summarize for you again, it is a transaction based tax. It is the ultimate user who is going to pay for it. It is a technology based tax, which means quality data, proper documentation and proper data feeding in alone will match the parameters in the system, and unless the parameters in the system are matched, there will be no credit given. GST and drawback. With the introduction of GST, the SENVAT concept has been removed, and hence we now have a single rate of drawback, whereas in the old regime you had drawback when SENVAT claimed and drawback when SENVAT is not claimed. Then there is a concept of legal undertaking. whenever there is an export, that is of goods or services to an SEZ or of goods and services to a user in a foreign territory, there is no GST to be paid. And hence you could file an LUT with the department and do an export to an SEZ or to a foreign territory against the LUT without having to pay any tax on the output. To summarize again, it is a technology based tax. It became operational from 1st of July 2017. It has 4 different types of verticals: IGST, CGST, SGST and UTGST. It is a transaction based tax, a single tax, and for the custom broker, quality data entering proper documentation is essential.